How's it going, everyone? My name is Hank and welcome back to the channel. Now today I want to be talking about the latest earnings report from Nvidia. Now Nvidia has always been one of my favorite companies. They are a well-known chips manufacturer that focuses on producing processing units for GPU, the graphics card processing units, and for use for gaming and also data centers and robotics. They have a great line of products with the latest GeForce RTX 3080 Ti for laptops and the newly released RTX 3050 for desktops. And they support some of the latest online gaming titles. Now, their graphics card has always been one of the fastest graphics card on the market, but one of the downside is that they are extremely expensive. On the other hand, in terms of data center, they are also working with Meta, Facebook, to build a massive AI research supercomputer, which would help improve AI performance and potentially be used for the new metaverse that Meta is trying to create. And Nvidia is also in partnership with Jaguar Land Rover in an attempt to produce AI-powered autonomous driving vehicles, and they hope to be able to do that starting from 2025. But what actually happened after Nvidia's latest earnings report is that their share prices dropped by around 10% over the past couple of days. So I want to see what exactly has happened there. Let's take a look at some of the key takeaways first. So their data center revenue beat analyst expectations. Demand for services offered by data center has also grown rapidly. And they also posted record revenue in gaming, data center and professional visualization businesses. So let's look at some of the actual figures. In terms of the actual earnings result, their adjusted EPS, the reported value is $1.32, which beat the analyst prediction of $1.22. Their revenue is the reported value, this is for the last quarter. Their revenue is reported at 7.6 billion, which is also higher than the analyst projection of 7.4 billion. Data center revenue is 3.3 billion, which also beat the analyst prediction of 3.2 billion. So basically they beat on all their earnings as compared to the analyst projections. So let's compare their revenue to the previous year. So for the fourth quarter, they have a revenue of 7.6 billion dollars, and this is up 53% compared to the same quarter of last year. Now their net income is at $3.3 billion, which is up 71% compared to last year. Earnings per share, $1.32 per share. It's up by 69% compared to last year. Let's have a look at the total yearly revenue. So the total yearly revenue is at 26.9 billion. This is up by 61% compared to last year. Operating margin is roughly the same. The net income is at 11.2 billion. And this is up 79% compared to the 6.2 billion last year. Earnings per share is at $4.44, and this is up 78% compared to last year. So basically, pretty much everything beat last year's numbers by a very significantly wide margin. If we look at individual sectors for Nvidia, their fourth quarter revenue for gaming is at 3.4 billion, up 37% compared to last year. If we look at data center revenue, it's at 3.2 billion, up 71% compared to last year. If we look at personal visualization, fourth quarter revenue was at 643 million, up more than 100% compared to last year. The only department that they actually lost money in was in automotive and robotics, where their automotive revenue was 125 million, which is down 14% from a year ago. So far, it all seems to be pretty good news. So let's now have a look at their guidance for the next quarter to see what actually happened there. Maybe the guidance is not so good. So in terms of guidance, the revenue expected to be 8.1 billion, which is also significantly more than the 7.6 billion of previous quarter. Margins are expected to be roughly the same. Expenses are expected to be 3.5 billion. But basically, they still expect to continue on growing in the foreseeable future. So their guidance is also looking pretty good. So basically, they beat on earnings, beat on revenues, beat all of analysts' expectations, have pretty good guidance, yet the stock still tanked. And this is why the market simply just makes no sense at the moment. CEO of Nvidia came out and said that we are seeing exceptional demand for Nvidia computing platforms, and they are propelling advances in AI, digital biology, climate science, gaming, etc., etc., autonomous vehicles, robotics. Basically, he's saying that the business has extremely strong momentum going forward. So it makes absolutely no sense that the share price is dropping. Look, I don't know. Sometimes the market just simply boggles your mind. The share price for Nvidia is definitely dropping. If we draw trend lines, you can see that they are definitely trending downwards. However, there is a potential buying area at the 200-day moving average, which is around the $230 mark. I mean, there is always possibility of Nvidia share prices falling below their 200-day moving average. But at this price, Nvidia is really quite a bargain, so there's no reason why not pick up a couple more stocks if you have the ability to do so. Now, just as a quick disclaimer, this is not financial advice, and I am personally an Nvidia shareholder, so I will probably try pick up more Nvidia and dollar cost average the price down. But let me know what you think, and I'll see you in the next video.